Thanks for staying with us, everyone. Former Trade and Industry Minister Dr. Kospio Gabra has said that the current global tariff war could have an indirect impact on Ghana's economy if not managed properly. He made this remark at the Ghana Corporate Finance Awards Gala Dinner 2025 in Accra over the weekend.
But certainly as a Ghanaian citizen, I would hope that the government of President Mahama and the outstanding colleague, Dr. Atu Forsen, who presented a budget that I think most people found fairly satisfactory recently, will add that to their many thoughts and concerns so that appropriate actions are taken to protect the Ghanaian market, Ghanaian industry. Among them, at least I've seen President Mahama come out, and I think Dr. Forsen has also said that there will be measures that will be taken to protect Ghanaian industry. So the government of Ghana, I hear, will prevent at least state-owned institutions from importing items that could readily be manufactured in Ghana. That's one simple and very straightforward way of at least making sure that as many of those goods that can be produced here in Ghana by yourselves or by enterprises that are not here are produced here, rather than imported from elsewhere with all the imported costs that I've just described. But since Ghana is already a highly import-dependent country, because even when you're manufacturing products, intermediate goods, the machinery, the equipment, the chemicals that you may need even to manufacture your product often has to be imported. So however you look at it, some importation will take place, which could increase the cost of business and cost of products. I didn't come prepared to make a speech, but having been asked to say a few words, I've chosen to deal with the global economic crisis that we are hearing about, the effects on international trade, especially of US tariffs that are now globalized, the Chinese in particular, who the US on one hand were targeting, but who have also responded with equal anger and equal measure. If you hit us 34%, we also hit you 34%. So, as we have said even in our own little country, when the elephants fight, it's what? The grass that suffers. So we are the grass in this particular instance. And I'm sorry to say that some suffering is likely to take place, but we hope for the best. And I'm saying that our government can take some measures, as I believe they've already started taking, to alleviate the likely impact of some of these actions, international actions in the domestic economy.
While still on the global tariff war, European share prices have plunged and Asian stocks have seen their worst drop in decades as markets continue to reel from Donald Trump's tariffs. In London, the FTSE 100 index fell to its lowest level in a year, down by 6% at one point. Joining me on Zoom is head of trading at Republic Securities, Patrick Edemagama, to discuss the sell-off we are seeing and the potential impact on the local bears. Good afternoon to you, Patrick. So fear is driving these drops. The markets are realizing tariffs may be here to stay. Tell us more about this sell-off we are seeing and how significant this is.
Well, good afternoon, Darrell. What we are seeing is a reaction of the markets. We've seen it in the global market. The Asian market is also showing that. And we are expecting the global spillover effects on our markets. But what we are expecting also is that we are looking at for exports-driven companies listed on the markets that export to the U.S. market to be affected. At least the valuation will be affected because analysts will have to price the risks into these particular companies. The companies we are talking about like CPC, PBC, Benzo Opam, Aluex, PZ, Farm Milk, GGBL, and Total. Those are the companies we know have that kind of exposure to those markets in terms of cocoa and beverage production and all that. So we expect the evaluations to be affected by the risks posed by these tariffs.
how concerned should we be? I mean, if the global markets are struggling, foreign institutional investors may become more cautious about investing in emerging markets like Ghana. And this could lead to reduced foreign portfolio investment in the Ghana Stock Exchange and cause stock prices to fall, especially in the absence of domestic buying power to absorb the selling pressure.
Well, the beauty of this and our market is that the real movers and shakers of our market are not these particular companies I called. If you look at the banking stocks and the stocks that moved the market last year and those that are moving the market this year, most of these are not part of this. So we expect the general market to perform well and also be in the positives. The only thing is that investor confidence will be shaking a bit, but it is going to be a global spillover. Everybody is going to have that same impact. So it shouldn't be something investors should worry about. We should just monitor and see how this really affects the bottom line of these particular companies.
Well, so this week we've got our eyes on 5 stocks, including SIC Insurance. They're expected to record gains on the stock exchange. Tell us more.
Well, we are seeing demand mounting up for these particular stocks and some other banking stocks. Once this demand is coming up without the necessary level of supply, then we expect prices to inch up. So we expect that to happen also in MTN. After 14th, MTN is going to pay dividend. And mostly we note that people like to plow back their dividend into the stock, so we expect demand for MTN to go up after the 14th of April to be able to meet what we currently are expecting.
All right, let's switch topics. Let's talk about the Treasury bills market. The government misses target for the 3rd consecutive time this year. The Bank of Ghana auction results showed that the government rejected a little over 2.3 billion cedis of the total bids, despite recording a 7% undersubscription. Tell us more about how the auction went.
All right, so Daryl, what we noticed is that the government failed to meet its target for the 3rd consecutive week, falling short by 2.69 billion. But it also rejected bids of 2.37 billion. And that is a clear sign that they are not just accepting any particular rate you give them. And in response to that, we saw that the 91-day dropped by 6.09 basis points to clear at 15.64%. The 182-day also dropped by 22.25 basis points to close at 16.5015%. And then the 1 year also dropped slightly by 1.46 basis points. And this is, again, being clear to us that the finance ministry is not just accepting anything you throw at them. And it could also be a strategy to actually build up liquidity for this particular coming auction, which they are targeting about 6.6 billion this week.
Yeah, I mean, you brought it up, the rejection of the 2.3 billion cedis worth of bids, suggesting that there's some mismatch between what the government is willing to accept and what the market is willing to pay. So what are the implications? Implications could this have on government's debt strategy, especially in terms of interest rates and future auctions?
Well, okay. So the implications, we will say that if this continues week in, week out, we will be eager to see how government is going to replace these funds, because it's very clear to us that almost every week we have a minimum, or I'll say an average of 4 billion plus to settle. The government has those obligations. So if they keep rejecting these bids and trying to control the rates, we are eager to see how they are going to replace these monies that are being pushed to other investments other than the Treasury bill.
All right. Patrick Edemagama, Head of Trade and Republic Securities, appreciate your time. Now, the Bank of Ghana has justified the decision to increase the monetary policy rate, insisting it's needed to tame inflation, stimulate growth, and improve the business environment. The central bank said this in a meeting with the executives of the Ghana Union of Traders Association. Here's more in this report.
Meeting is part of Bank of Ghana's plan to open up the workings of the Monetary Policy Committee to critical stakeholders in the business community. The Bank of Ghana sees the Ghana Union of Trade Association as a critical stakeholder when it comes to letting them appreciate the policy decisions of the Bank of Ghana. The union had in the past criticized the Bank of Ghana over its policy rate hikes and its impact on cost of credit in the country. But speaking at the engagement with the executives of the Ghana Union of Trade Association, Director of Research of the Bank of Ghana, Dr. Philip Abrodotu, says the Bank of Ghana had no option but to hike the rate to check excess liquidity on the market.
Distinction clear that the liquidity comes in two forms. We have liquidity that sits with the banking system, and then we have in the rest of the economy. The liquidity we are talking about is liquidity with the banking system.
Hi, welcome back to the marketplace. We had issues bringing you this story. We're going to try one more time. The Bank of Ghana has justified decision to increase the monetary policy rate insisting it's needed to tame inflation, stimulate growth, and improve the business environment. The central bank said this in a meeting with executives of the Ghana Union of Traders Association.
The engagement with the executives of the Ghana Union of Trade Association, Director of Research of the Bank of Ghana, Dr. Philip Abrodotu, says the Bank of Ghana had no option but to hike the rate to check excess liquidity on the market.
Distinction clear that the liquidity comes in two forms. We have liquidity that sits with the banking system, and then we have liquidity in the rest of the economy. The liquidity we are talking about is liquidity with the banking system. And for the past 3 months, we've seen heavy doses of liquidity in the banking system. The question is, where is that liquidity coming from? That liquidity is coming from, we saw some fiscal slippages in the last quarter of the year. November, December, there was heavy spending towards the election. All that liquidity has found its way into the banking system. Then come January, there were also some heavy payments that were made. Now, this liquidity in the banking system is looking for work to do somewhere. So the liquidity keeps moving around, and the central bank needs to act fast to clean that liquidity, else when it spills into the economy, it's another problem.
The president of the Ghana Union of Trade Association, Dr. Joseph Obey, noted that even though he welcomes the action by the Bank of Ghana, he's still struggling to understand the excess liquidity challenge being put across by the regulator.
Then at least I know that we are fighting it from a certain angle. But then we have to look at ways that we can solve this inflation, the interest rate, and especially the exchange rate.
Speaking at the same program, Director of Communications at the Bank of Ghana, Bernard Otebel, noted that this engagement is very important to the regulator.
Into our corridors to see exactly what goes into the inflation dynamics. How did we arrive at the decision? What led to the decision? And what are the things that were considered?
All right, you're watching the marketplace. Deloitte Ghana is gearing up for its highly anticipated 2025 alumni homecoming event set to take place on Friday, the 11th of April, at the forecourt of Deloitte Place. Now, this special gathering promises to reunite former partners and employees, both from within Ghana and abroad, for an evening filled with conversations, engaging network opportunities, and celebration. The event will also serve as an opportunity to reinforce the Deloitte alumni network whilst honoring the shared accomplishments of both current and former employees throughout the years. We are joined now by Abna Baini, Chief Sustainability Officer for Deloitte West Africa, and audit partner, to share more insights. Good afternoon to you, Abna. Thank you for joining us in the studio. Yeah, and so we're going to first talk about what this alumni event is. Maybe you could shed more light on it.
All right. Thank you so much, Daryl. Good afternoon and greetings from Daniel Keusu and all the partners and staff at Deloitte.
Yep.
So a little bit about the homecoming, which is scheduled for this coming Friday. Deloitte Ghana, about 2 years ago, celebrated our 75th anniversary. And during that period, we had a lot of our alumni in the diaspora and within the country as well, coming home to join in the celebration with us. At that time, we realized what a huge network we have. We have always known it, but when you gather in one place, it becomes so much more real for you. We decided, under Daniel Keusu's leadership, to have an event particularly for alumni. We'd like for them to come home. We know they're doing great things out there, both in the diaspora and within the economy here in Ghana. They're market leaders, and we are mindful that we are where we are today because of the solid foundations that they laid, both as partners and as staff. So this Friday is just a period for us, for them to come home, for us to sit down, share stories, look back, and then also look forward to see how we can connect going forward.
Yeah, I know you're trying to forge stronger ties.
Precisely.
What else are you seeking to achieve with this event? What do you hope to be the outcome?
Okay, we're hoping for better connections. We're hoping for new collaborations. We're hoping to appreciate what they've done in the past and also acknowledge their developments and the milestones that they're achieving in the market, even as we speak today.
Yeah, and how is this event going to play in the overall growth and success of Deloitte as a company, of the alumni network, and what next after the event?
Okay.
3 questions in one.
So how is it going to play for the event?
Yeah, what's going to be the impact of this event on your overall growth and success as a company, and what next after the event?
Okay. So we're very mindful that as a foundation or as a stepping stone, the alumni who've passed through Deloitte are now out there in the market. Some of them are key players in the market. So we're hoping to reconnect with them. We're hoping to make inroads in the businesses, in the arenas that they currently serve and they play. Going forward, we're hoping to reconnect with them and do other things in the market with them where possible. We're hoping to also strengthen our network because there are some people who were not in the firm at the same time, the same period of time. So we're trying to connect them to each other. We're trying to also connect with them and then just expand the network completely. We're hoping to also strengthen our database. We're hoping to connect and make sure that they know that we are still here. Number 71 is home currently. And we're still there. We're still there to do bigger and greater things with them.
So promises to be an exciting event. Once again, happening on Friday, the 11th of April.
Precisely.
At the Deloitte Place.
At the Deloitte Place in Accra, which is at number 71 off the George Walker Bush Highway.
Great stuff. Great stuff. You know what? We can't have the Chief Sustainability Officer of Deloitte in the studio and not speak with or 2 businesses in these days where we are trying to, incorporate ESGs in the operations of companies. What would you tell any business leader, any executive watching the marketplace right now?
Okay, so at Deloitte, we are mindful that whilst we are a business, we want to do business responsibly. And so we go by the mantra, purpose beyond profit. It's not enough to just think about the dollars, the bottom line, the money. You need to earn it responsibly. And so we're constantly looking for opportunities to give back to society. And we want to do this as a unit, as the Green Dot family. So we would say to businesses out there, it's not enough to make the dollar, the bottom dollar or the bottom CD. It's important for us to do it responsibly, looking after our environment, looking after our society, because we are here because of the society, because of the clients and because of the people. So let's do it responsibly, purpose beyond profit.
Yeah, well put. Abna Baini, Chief Sustainability Officer, Deloitte Ghana. I hope I'm invited, associate of Deloitte, to the event. I mean, I associate with the company, so I didn't get a yes.
I don't want to say it on air.
Thank you so much for coming through.
Thank you very much.
All right, that's the marketplace. Thanks for watching. More news on our website, myjoyonline.com/business. The day's top stories over there. We leave you with our Money Lab episode for today. Don't go anywhere.
Hello everyone, we welcome you to today's Money Lab session. My name is Dr. Skutin, an audit manager with Deloitte. On our last episode, we talked about the uses of financial statement. Today, we want to look at how to make the audit a very smooth one. So, I want to start with the audit process. The audit process basically looks at the planning process, the internal control testing, substantive testing, and the reporting section. And these are the reporting section where the audit opinion is finally concluded on and issued. Now, how do you get ready for an audit? You have to get your draft financial statement ready, you have to get your trial balance ready, and all supporting schedules ready. Once you get these, the last requirement is your general ledger transactions. The general ledger transactions support all your trial balance transactions from inception of the year till the last date of the year. Once you have these key requirements, you are ready for an audit. Thank you, and talk to you on our next episode.